says he advises his clients, and your listeners are going to love this. He says to buy, if you could, to buy copper ingots and in the new house, put them in the wall boards and fill them up. And then in a few years, tear out the wall boards and buy yourself a fleet of Maseratis.
Well, welcome everyone back to Risk. My name is Lee, and I have a special guest today. I have David Smith, who is a senior analyst at the Morgan Report. He is also the ambassador to the Lode Digital Silver and Gold Project. Why don't you tell us a little bit about what that project is?
Well, we are in the process of creating a monetary system where we have tokens and coins that are stored, that are backed by gold and silver, and they are stored, physical silver and gold is stored in 7 or 8 different vaults around the world, highly secure. And the idea is to have a multiple use for the metals. Some people want to spend it, some want to hoard it in case of higher prices, some want to use it as a legacy investment. And we've got 8 or 9 different use cases for it already. And what we've done, we understand there are at least 75 or 80 different digital space projects that have attempted to do something of what we're doing, actually some small versions. Some of them are nothing more than storage vehicles. But what most of them have not done, and why most of them are moribund now, is that they have not approached the regulatory issues first. They put together the idea of their ideal vehicle, and then they found out that in many cases they can't meet the regulations. I mean, they got something that's classified as a security, and they're trying to make a coin out of it. And so they have had great difficulty. So we kind of reversed that process, and over 4 years have put together a program which is doing very well, and which looks like it has an excellent chance of being there for the long term. And given the fact that we think that as the gold and silver bull run really get underway, it's going to be difficult for most people to get physical metal by the normal routes of going down to the corner mint or or ordering them online. We think that this will be an opportunity for even more people to actually put it in a digital format and put it into the 21st century modality of being on the blockchain, which is, as you know, is influencing, and not only influencing, but standing just about every aspect of financial services on its head.
Yeah, cryptocurrencies in general really have gone to the forefront over the past few years, and somewhat left precious metals in the dust. But there's a whole core of us true believers in precious metals. So let's start talking about copper, which will be the biggest focus of this discussion. It's a non-precious metal, but it is highly in demand. It's very much an industrial metal. It's used pretty extensively in electronics and other things, including plumbing. What's currently going on in the copper space?
About 2 years ago, the Morgan Report saw that copper was going to become a pretty big issue as the build out of the green revolution got underway. And now it's got at a fever pitch where the idea is to go carbon neutral, to not use fossil fuels, to produce somehow the elements that we need out of the ground without causing issues with the environment. And there's a lot that's been improved on that. For example, in Australia, which is probably a leader right now of using automated trucks, those massive trucks that have tires that are 4 feet taller than you and I are, that move many tons of ore around. And many of these are being moved through automation and through the blockchain digital space, so they don't need to use fossil fuels, and they're using electricity. So what's going on is because a lot of these applications need copper, they need silver, they need rare earth metals, and they need them in greater quantities than you would normally have to have with internal combustion engines. And so part of it too is that they're trying to do it so quickly that evolutionary aspect has to become a revolutionary aspect in their view. And so suddenly this massive demand for copper is out there. And if you look at the charts, and we put reports out for our readers, there have been very few large copper discoveries in the last even 15 to 20 years. And you can't just find a small discovery and start mining copper cheaply like you would even with gold or silver or some of the other metals. I mean, you can have almost a backyard gold and silver project by doing placer work, for example, that can make money, but not copper. Copper needs to be has certain elements in order to make it viable financially. It has to be big. It has to be a decent grade. It has to be in an area that where the regulatory agencies are possibly likely to let it flourish if it meets certain requirements. It has to be in a what we call a low country risk area, ideally, so that you have some predictability in terms of getting this thing going, because you don't just start digging and then before long you've got copper 6 months later. It has to be.
What I find interesting about copper is it has one similarity with gold. Pretty much most of the copper that's been mined through the years has been recycled and is currently being used. And up until recently, that has been an adequate supply of copper. But that's somewhat changing now, isn't it?
It really is. It has another connection with gold, which we feel makes a particular project viable, and I'll mention that in just a minute. But so it takes $2 to $3 billion, not million, but $1 billion to put a copper project into production. And it takes years to get it set up. It can take anywhere from 10 to 20 years between the discovery of a potential copper deposit and actually bringing it online. And so that is really knocks out a lot of these projects where they say, well, we found some copper, we have no idea how big it is, and go from there. 42% of the world's copper currently comes from Peru and Chile. And here you have country risk coming in, because now there are noises about cutting back on the amount of the water that could be devoted for the production, because these are water intensive operations, and they don't have a lot of water in these countries where it's needed. Also, there's talking about a new tax regimen, and new requirements for the environment. And so this throws up a lot of unknowns, not to mention the locals have their own needs and desires with how that will affect their areas. A lot of the copper projects that are now being used are moving toward the latter stages, old age, you might call it, old age stage of mining, where they're going to have lower grades, where they're going to have some of them that were open pit or have to move underground, like Chuquicamata in Chile, which I visited a few years ago. They're now moving underground, and they've got pretty good grades, but it costs more, as you can imagine, to mine underground than it does in open pit. And so here we have an area where over half of the world's copper is being produced, or I should say close to half, and all these uncertainties are now cropping up. And some of these projects that we're talking about have been mined for 100 years. And they're not going to be able to do that much longer. So
is there a huge element of political risk with this in terms of globally the supply and starting new mines?
Absolutely. And now it isn't just a matter of country risk, but it's a matter of, you might say, social political risk, the ESG concept of environment social guidance that all companies now must hew to. And there's a lot of good reasons for that, but there are also some things that aren't too workable and some things that don't even make sense. And it's all mixed together. And you have these groups of people around the world putting their stamp on these things and making it more complex and more costly to bring a copper project online. There's a massive project in Arizona, which is, I believe, about 3,000 feet deep, which is apparently a very high quality copper. But yet there are issues with the locals about whether that should or could ever be developed. And, these companies put several $100 million into trying to get something going forward, and then find out that it may be delayed or may be stopped altogether. Their metrics really influence the choices that I made in looking for a project. And Pierre says the most viable copper project is one that's about 30% gold, 70% copper. And you can imagine how that can help out when copper is being hammered like it is the last few days, even though the the LME is saying we're going to try to limit the amount of backwardation that goes on, because so much copper is being demanded now. We're going to try to keep that price from going out of sight. Even as that's going on, we know that the metric and the value proposition for copper has not been changed at all. There's not going to be enough copper. In fact, you can make a case that maybe 1/3 of the copper that people really demand over the next 5 or 6 years, or even into the end of the decade, will become available. It's a big question mark. And so if you get a 30-70 mix of copper gold, it's much more profitable, and you don't have to worry about a situation where you might be redlining for a while if copper doesn't stay up there, because these big swings are going to happen. Even in a vibrant bull market, you see big swings in
Yeah.
the cyclical move that can last 6 or 8 months and make people think, well, maybe it's not going to be a bull market anymore. And these companies have to survive that in terms of raising equity and in terms of producing copper and selling it, for a decent profit.
Let's get more into copper's role in the economy. Some people call it Dr. Copper because it has the ability to kind of predict, generally speaking, where the economy is going. When demand for copper goes down, generally the economy is going to follow, and vice versa. What's your take on the recent moves in copper? I mean, we had this nice spike up, but now it seems like it's come way back down again.
Well, I think, and this is just something that I guess I'm coming up with stream of consciousness thought as you asked the question, but I think the copper story necessitates a little different way of looking at it now than it would if you and I were having this conversation 5, 10, or 20 years ago. Dr. Copper means it's if the economy's doing well, copper is probably going to do well, right? But we have something that's bigger than Dr. Copper now. We have Dr. Copper and Professor Copper, and copper is going to be influenced in everything going forward with the Green Revolution. And so it has so many more uses that are demanding a lot of copper than ever were even there before. And I think if we look only at the economy, then if you see the US or European economies slowing down a little, you think, well, the copper demand is going to fall off a cliff because the economy is weak. But there are so many discontinuities in the economy due to the approach to COVID, due to all of these different things, the socio-political, military changes and whatnot, that if we just look at the economic situation, what's going on in economies, and don't think about the overarching green movement and where a lot of these countries and states have said, we're not going to have internal combustion engines on the road by 2030 or even by 2025. And if you don't look at that and you focus on the economy, you miss the fact that no matter what the economy is doing, there's going to be a massive demand for copper, which is going to keep happening. And that's why, as an investor, it's really important not to overweight at a given time and go all in on an idea, but buy in tranches and have some money left over so that your choices, when we have these inevitable cyclical declines, you can buy more of what you feel is a really good choice rather than having no money to put in addition, or to be scared out of the market and sell in a panic and then see the overall secular trend, which has not been disturbed, keep on going right where you thought it would, but you're not participating.
It's somewhat similar to the silver and gold market. When we had this
Sure, absolutely.
run up, and now it's pulled back, and right at the bottom, people were posting online, I'm getting out of silver, it was the worst investment ever. I'm like, I'm buying more now.
Right.
So, Goldman Sachs was predicting back in May that copper could easily hit $20,000 per ton. Do you see a similar number, or do you see something different? And what would be your time frame?
What I think is that trying to make price projections is almost a fool's errand, because
Right.
it has the potential to go much higher than any of us think. And if we focus on a certain level that's up in the stratosphere, we kind of miss what's going on underneath. And we need to see that long view that it could happen, but not say, oh, this is gonna happen and I'm gonna be ready for it. And because that can keep us from taking partial profits. It can keep us from saying, well, it's gone too far now and I can't afford to do this, even though we're looking at a good project that might still be very profitable for investors. And so I like to say, well, it can certainly go much higher, but not try to fasten on a price, because I think that can inhibit my ability to be, flexible.
It makes sense. It reminds me of the old adage, the trend is your friend. So just stick with the trend and you'll be okay, really.
Absolutely.
So my understanding is that conventional power generation requires about 1 ton of copper per megawatt of generation, whereas the new green energies such as solar and wind need 4 to 6 times that figure. Is that accurate? And do you see like a tremendous build out globally of more green energy?
I do, but the irony on that is global energy, renewable energy, is bumping up against certain realistic limits. They look at Germany last winter. What happened when the wind stopped? The turbines didn't work. When the snow covered up the solar cells, you couldn't get electricity that way. And they've completely gone away from nuclear energy. They had to fire up coal-fired plants, and they had to buy electricity generated by nuclear energy from France. And so to think that you can build out wind power and even solar indefinitely is I think a misunderstanding of what we're going to need to do in order to get to where we want to be with the amount of electrical involvement, not only for recharging cars, but for keeping our houses warm and for using in manufacturing and whatnot. And so these renewable energies, for example, the propellers on the wind power have a 15-year rough life. And then when they're done, you can't grind them up and recycle them, like get the stuff out like you can a lot of other things like grinding up a refrigerator. These things are being buried as we speak in Wyoming. These 100-foot propellers are being buried underground. They can't be recycled. And the batteries that are being created in the EV cars, that this next generation that is replacing the current ones, they're very toxic and they're hard to recycle. And the same thing with the solar cells. They 15, 20 years maybe at the max, and they do suffer a decline in productivity. And not to mention the problem of base load. But if you don't have a proper base load, you bleed off that energy, or you have to store it in a battery, which you have to create in order to store the energy, which means you lose more energy. And so that's one of the reasons I think that nuclear power is now seeing a resurgent interest, even among the green movement, which they realize with third and fourth gen nuclear reactors, and especially the movement toward SMRs, small modular reactors, that this is a wave that really has a lot of sense. Now, I'm not conversant as to how much copper is used in a nuclear reactor or an SMR, but I would imagine it is substantial, but I certainly stand to be corrected on that. So I won't hang my hat on copper for use for that. But the point is, regardless of that, copper is going to be in massive demand. They're not finding the big projects. They take so long to develop. And with all the hurdles to get there and all the money that's needed, these are just headwinds that are going to be, like putting your head into a 40-mile-an-hour wind the whole time with very little respite.
Let's talk about copper miners. Do you cover copper miners, and is that space different than, say, silver and gold miners?
We do. We wrote an essay about almost 2 years ago and we saw this as an adjunct to our gold and silver mining stocks that we hold, and we did one on uranium, and we did one on the digital space for blockchain. And we did this because we felt that if you choose a few best of breed in each of these subsectors, then you'll be less likely to be shaken out as they move through their own reactions. And sometimes they all drop together, but usually they don't. They have their own metrics. They're not identical. They're similar. The one similarity is that they're all in evolving bull runs, and that's a good thing. And so maybe when uranium is really going really well, like it was last year and like it was a couple months ago, maybe gold and silver are flat, or maybe copper's flat. And then maybe copper has a run. Now, copper had an excellent run earlier this year, and now it's giving some of that back in what you would expect a reaction to that, what's going on. And this way, you don't get knocked out of your positions. Plus, you can participate in what's going on in a variety of subsectors. And so when copper is really moving and gold and silver are flat or in a broad sideways range like they have been for over a year, it's easy to be kind of depressed because you say, well, I could have been in copper. But if you've gone ahead and if you've chosen several that you feel are the best ones you can find, and you use the metrics like I suggested, like a 70-30 mix, low country risk, a big project, a company that can fund that project, then these things tend to move along well. And so we like to see copper projects, not only that, but that are either producing now or that are within a few years of production. Some of these are going to be 10 or 15 years out. Now, that doesn't mean you can't make money in them, but we want to make significant money. And we feel that you can make more big money and hold on to it if you use the criteria that we suggest, rather than if you just throw darts and everything that has copper in the name, you pick some up.
Yeah, are they? I mean, I know junior miners in the precious metal space can be extremely risky. Does the same situation exist in the copper space?
Absolutely, and maybe even more so because they depend upon a JV at least to get them going, and at some point, hopefully buy them out because they can't afford several $100 million to keep this thing going. And we have a project in Montana that is near one of the world's largest past producing copper mines, and they have a JV with Rio Tinto, a 30 where Rio Tinto is going to spend 30%, $30 million over the next few years, and has already been spending that in looking at this project. They've identified a very large copper project. It's in an area that's amenable to mining. There's a good chance that if it meets their criteria, which it looks like it is, they're going to be bought out. And so that's the kind of project. Now, this is a company that's an exploration company that's not producing, but it's JV'd with one of the world's largest majors. So that sort of thing changes the metric completely on whether or not you would look at some exploration company that's out there on their own, looking for massive volcanic sulfides.
Are you still bullish on uranium? It's had quite a run recently. What's your outlook? I mean, it sounds like fundamentally there's going to be an increasing demand as nuclear power gets more recognized for its value.
Absolutely bullish. In fact, things have been happening within the last few months that make the uranium story more bullish than we anticipated, much more so. And we thought it was very bullish when we started writing about it almost 3 years ago. There's been two massive historic bull markets in copper in this century. One took it to about $160 a pound, another to about 140. And we believe that this next one has the potential, could be, to go even higher or certainly equal that sort of thing. Because the thing that fascinated me more than anything else when I started researching this is that during the last bull run, which was massive, and by the way, the companies that were participating in that, as Rick Rule has mentioned, had a 22x return during that bull run. That bull run in uranium started with a surplus in uranium and ended with a surplus in uranium. This one has started with a significant deficit and is proceeding with a deficit. And so that doesn't mean it's going to go on forever. In fact, we actually believe the potential is for a shorter run than people might think. In other words, maybe people are anticipating a big, huge run all the way through the end of the decade. It might only last 2 or 3 years, which sounds like not a lot, but that's a lot. That's an opportunity to make some really big money where you have a massive, massive move, which is unsustainable, and then drops down to an area that is above where it is now, but it's a broad sideways trading area that is sustainable for producers, for investors, and for buyers, the people that use the uranium in their nuclear power plants, where everybody can live with it. But we want to get into the big money and get out before that phase. What Maren Katusa calls the boom and the echo. The boom will be the deal where FOMO rules and everybody can't get enough uranium stocks, and it's never going to go down and all this sort of thing.
Sure.
And then that drops, and then you have the echo, which is a broad sideways trend, which you can make money in, but not as easily. And we think that nuclear power has a lot going for it. Eventually, it may be eclipsed by something like thorium or something like that. So all of these trends at some point, even copper, there'll come a day, probably maybe, I don't know, 10 or 15 years from now, when the premise that copper was based upon will no longer be valid, in which case you don't want to have much money in copper. Yeah. But that period is years away. That is years away.
What would you say, 5-10 years? I mean,
I would say safely 3 to 5, with an emphasis on closer to 5, and depending on how things evolve, it could go substantially longer. But I think the sweet spot is the next 3 or 4 years, because, at some point the market starts pricing in the future. And that's what's going to be doing with producers and explorers and whatnot. So say waiting 2 years to get involved in copper, I think would not be a smart move. Right now is the time to be getting involved in copper, learning about it, and understanding yourself in relationship to what you hope to accomplish in that kind of a bull run. And, we haven't talked about too much about specific companies. If you'd like me to mention a couple names,
Yeah,
I can.
please, of course, yeah.
One of the things we did, we established kind of a 3-tier look at copper in the report that we wrote. We thought about what is a major copper producer that is going to be, profitable no matter what, and it's kind of a solid. It's like a major gold producer as opposed to a junior. And then we thought, well, what about a smaller company, and what about one that's close to production? And then what about a royalty company? And so if you look at that from those 4 angles, and you choose, let's say, one from each of those ones that I mentioned that you feel is the best, you don't need 20 copper companies, you need 4. And then maybe along the line, you see 2 or 3 more that pique your interest that you missed. You don't have to hold all the good copper companies. You just have to hold some of the best. You don't need all the money that's available to copper investors. You just need quite a bit. And if you structure it that way, you can do well. Now, Ivanhoe arguably has 3 of the largest projects in the world in terms of grade, and the 2 of these projects are primarily copper. One is copper zinc. One is primarily copper, and they are in high political risk areas, the DRC, Congo, and in South Africa. But there was one man, Robert Friedland, who I believe, and he was doing ESG 25 years ago. So he's not on this bandwagon of making sure that the locals are happy and you're not polluting the environment. He's been doing this stuff all along. Now, part of the reason he can do that is because his copper deposits are 3 times as high a grade as almost anything else in the world. And so he has a margin there, but also he understands the need to develop these long-term relationships in these areas that are very high risk. I would say, I can't think of another person in the world that has the capability to do what he's doing now. And so that's a fairly safe project, even though it's allied with Chinese interests and it's in high, political risk area. It's such a high grade copper that if a person wants to have a position in a good copper producer, they almost have to look at Ivanhoe. One will be, I think one of those is coming online this fall or has already started producing. Another one will be 2 or 3 years out. But the upside in this thing is massive too. They have just started looking at the brownfield areas that where they're producing. Now, brownfield, for people that may not know this terminology, this is extra potential resource and reserves in areas contiguous or nearby to where they're already producing, as opposed to going 1,000 miles away and looking for a new deposit. This is looking for extensions of the maiden deposit that they've already found and sometimes put into production. And what they're going a long ways away is called greenfield. So he's got a lot of brownfield, and then he's got this South African project with PGM materials, and he is a copper bull par excellence. He once said, and if you get a chance, he's done a few interviews, not very many on YouTube. He says he advises his clients, and your listeners are going to love this. He says to buy, if you could, to buy copper ingots, and in the new house, put them in the wall boards and fill them up, and then in a few years, tear out the wall boards and buy yourself a fleet of Maseratis. I mean, that's how much.
He really thinks it's going to go up that much?
Yeah, not only that, but this is another thing, and another thing he's doing better than anybody I know of. He is doing value-added copper. He isn't just digging copper out of the ground and polluting things like they do in Brazil. He's doing it in a way that is going to be a special type of copper that is, you might call it a green copper. You've heard of, they talk about blood diamonds and they talk about conflict gold and stuff like that, right? And so there's a big movement to make sure that gold didn't come from an area that polluted the Amazon River, as an example. Well, he's doing the same thing with copper. And with his ESG format, which is just unbelievable. One of his copper mines, almost half of the workforce is women. I mean, giving these people opportunities, really genuine and whatnot. But putting that all together, he's going to have a level of copper, I believe, that will sell for a premium to what other copper deposits can do. Now, that's one approach. Now, there's another one, and I won't mention the company, but people can figure it out. This is a massive copper discovery in Ecuador. I know the CEO personally. I have great respect for him. I'll give you one clue. This individual made the largest gold discovery in the last 25 years in 2006 in Ecuador.
I'm sure some of our viewers can figure out who that is.
They can, right. We got to make him work just a little bit, right? And so one of the pieces that he's discovered is a 22-kilometer, pretty much contiguous copper deposit that has a special type of copper that's only found 20% of the time in the world. It is so high grade that you don't need a smelter. You can do in situ plate recovery. Now, that's the sort of thing you want to pay attention to. Now, this stock is like 80% off of its high, and it's going to take a while to develop. And so that's another thing. Here's a tremendous opportunity, but can you last as a shareholder that long without getting shaken out? And are you willing to hold for, say, a 70 or 80% decline? And that's where buying in tranches can keep you in the game if you believe in it. You don't go in and buy everything you can when you first hear about it. You buy in 3 or 4 tranches, especially into weakness, so that you can be around if this thing is successful and it gets sold to a major for the payday. And that's the whole idea. If you can't last the payday and you can't last the declines, then you're just, you're roadkill, right? As Rick Rule says.
So, David, are there any other areas that you want to cover in this discussion that we're missing?
Well, I think we've covered it pretty well what the Morgan Report philosophy is for doing this. And I think people can kind of hitch a ride on that. David has a weekly letter that's free that you can sign up for. I have some reports for people. I don't think I posted my copper report yet, but I have some gold and silver and uranium reports that I have written by invitation from the Prospector News. And those are PDF'd, and they can go to the Morgan Report /free reports and click ones they want. I think I've got 7 or 8 there. So people that are interested in the broader spectrum of resource sector can go there if they'd like. But I think that your focus at this present time on copper is much to be lauded. And I think even if people that just want to do copper only, it's going to be a little trickier for them to hang on. But if they make good choices, probably enabled by your discussions, they'll be around for the payday. And I don't see anything really. And we haven't even talked about the massive back orders that China is trying to do to build up what basically involves a strategic reserve in copper. And when we hear these stories about, the economy's slowing down or the copper is not going to be needed as much for EVs, so a lot of that is shaking out the roadkill. And the really big smart money that invests not for 2 or 3 months, but for 5 or 10 years is coming in, and they're picking up those shares that are being put on the market at fire sale prices by people that don't have the temerity to stick it out, or that don't have the strength of their philosophy. And I can tell you something. I've learned this the hard way. If I'm not really committed and a believer in the story, and I don't have to be a true believer, but if I don't feel strongly that the story that I'm looking at makes sense and can make me money, it's hard for me to even care. Like I don't care that much about lithium. I know that lithium is on everybody else's lips now and people have made big money, but I'm not going to buy a lithium stock because I won't stick with it. And if it sits there for a while, I'm going to go, well, that's dead money. And I'm going to sell it at a loss and put it into something else. I'll give you one example on this, which is not copper, but it's something that has worked for me. Almost 5 years ago, I found a potash play, which was not in production, which not even being built, but which is a paradigm shift for me that I felt was so important and would change the metrics and I could eventually make quite a bit of money on it, that I wanted to own that company. So I did all the research. I talked to the CEO. I kept up with him over the years. I took a modest position, and it's going to redefine, how potash is produced, and in terms of the environment and everything else. Everything about it is good. I'm not interested in any other potash play. I don't hold 5 potashes. I hold this one. I held it for almost 5 years, and I did a little trading, so I ended up with only having about 20% of my money left back into it. In other words, the market bought me out when I did some trading. But I still got bored to the point where the day before, this was a couple of weeks ago, they made a major announcement. I almost sold out at a modest profit. 2 days later, it was up 200%. Wow. And I'm hanging now, and I bought some more. So the point being, if I had 3 potash projects, I wouldn't have held those things for a year.
Yeah.
You had to go through that winter. So it's the same thing with copper. If you believe in it, then make sure you get the best ones you can find, and you're more likely to stick it out if it takes longer than what we think, because that's what happened to uranium. They talked about uranium for 5 years and it went nowhere.
I'm sorry to interrupt you. I'm assuming in the Morgan report that you lay out favorites.
Absolutely.
Okay.
And we make suggestions. We put some of them in our asset allocation portfolio, and we don't want to just have slavish thinkers. We bring up ideas sometimes that we don't put in the portfolio. It doesn't mean it's not a good idea. Some of our really good ideas have never formally been placed in there, but we do. And also, if you put everything into a portfolio, you end up with 100 stocks, and nobody can keep track of that. And we don't want to cause people that are new to the sector to come in and be bewildered. And so we say, put big money in big producers, major money, because they're the ones that have the least risk, and they'll go up, and put significant money into juniors. They will probably actually go up on a percentage basis, the good ones, more than the seniors, and put small money into speculation plays. And don't just buy one of our specs, put a little bit in each one. That'll give you the best chance, because most speculation plays don't work out, but a few do. If people, and I can't answer everyone, but I've been able to answer most, and I can't give professional advice legally, you know that. Individual investment.
Nor can I. We're just here having a discussion about our opinions.
Absolutely. But people can look over my shoulder, and I can say, this is how I approach it, or this is what I did, or look at these 5 companies and see if any of them appeal to you, right? Or look at them in this way. So anyway, they can write to me at, I'll give you the link, and then you can put it back in.
We'll put in the description basically how to contact you if they have any questions and they want.
Yeah, that'll be a personal contact. Okay. And then the other was will have to do with the Morgan report or the Lode project.
Sure. Well, David, thank you so much for joining us. It's been such a great discussion. Really learned a lot today. Look forward to getting this video up and sharing it with others.
Well, and Lee, I'm pleased to be here. Thank you for inviting me. And I think you're on the cusp of doing really good work for your listeners. And I hope that they pay close attention to you and listen to what you have to say more than once.